In the world of cryptocurrency, security and protection are of utmost importance. With the rise of cyberattacks and hacking incidents, many people are concerned about the safety of their digital assets. This is where crypto insurance comes into play. Crypto exchange insurance funds, also known as hot wallets, are designed to protect digital assets from theft or loss due to hacking or other security breaches. These funds work by pooling a portion of the exchange's funds and setting them aside in a separate account, specifically dedicated to covering losses due to security breaches. For example, if a hacker were to steal cryptocurrencies from an exchange, the exchange's insurance fund would cover the losses. These funds typically have strict security measures in place, such as multi-factor authentication, to prevent unauthorized access. It is important to note that not all crypto exchanges have insurance funds, and those that do may have varying levels of coverage. It is essential for crypto traders and investors to do their due diligence when choosing an exchange and to make sure they understand the level of protection offered by the exchange's insurance fund. Now, let's discuss the difference between trading and investing. Trading involves actively buying and selling assets in an attempt to make a profit in the short term. Traders use various strategies and techniques to analyze market trends and make informed decisions about when to buy and sell assets. Investing, on the other hand, involves holding assets over a longer period with the goal of achieving long-term growth. Investors may still monitor market trends and make adjustments to their portfolio, but their overall strategy is focused on long-term gains rather than short-term profits. Crypto companies need insurance for several reasons. First and foremost, insurance provides a layer of protection against losses due to theft, hacking, and other security breaches. This protection can help mitigate financial losses and provide peace of mind to investors and customers. Additionally, insurance can help crypto companies comply with regulatory requirements. As cryptocurrencies become more mainstream, regulators are becoming more involved in the industry. Many countries require businesses to carry insurance to protect against losses, and crypto companies are no exception. In conclusion, crypto insurance plays a vital role in protecting digital assets and providing peace of mind to traders, investors, and businesses alike. As the crypto industry continues to grow and evolve, we can expect to see increased demand for insurance products tailored specifically to the needs of this unique market.